Welcome to the What's Happening Birmingham video podcast.
Hello everyone, this is Jarvis S. Scott with What's Happening in Birmingham. Today I have the honor and pleasure of being with Miss Talibah Bayles. She is owner of TMB Tax and Financial Services, and we're here to talk about tax season 2020. Everybody is here. Time to get that refund check. For some of you, time to pay back the IRS. So I brought my good friend on to just have a nice open conversation about this wonderful topic.
That's
so
right.
Let's first start off, just tell the viewers a little bit about yourself. First time on the podcast.
All right. Well, thank you for having me, Jarvis.
Mm-hmm.
My name is Talibah Bayles, and I am the founder and CEO of TMB Tax and Financial Services. We are a full-service tax firm, which basically means we, for individuals, do individual tax returns. For business owners, we do business tax returns. We are really the financial support system and brain trust for small businesses because we do bookkeeping, payroll. We do tax planning. We also do business credit coaching. We are a QuickBooks solution provider, so we can make sure that your record keeping is the most efficient with the QuickBooks product. So yes, if you're a small business owner and an individual and looking for a tax company, we're where you should start first.
All right, so what's the new changes for this year?
Okay, so since Congress has been busy, much of what was done last year is still the same. As with anything federal government, the numbers were adjusted due to inflation. But for the most part, the same credits that were there last year are basically the same. So there is the earned income credit, there is adoption credit. If you have children, the child credit, the dependent care credit for if you are paying for a child care provider, which most of us are. There is, if you're a student and you have tuition expenses, there are two different credits for that. And then there are, if you're a small business owner and you're providing health insurance, there is a health insurance credit for small business owners as well. And one of the other ones that's not as commonly used, but if you're a homeowner and there are specific energy efficient like kitchen equipment and other things that you may have purchased, there are some credits available for that.
All right, so let's talk about some popular ones. First off, where we go on Sunday, churches. Deduction for that. What's the best correct way we go about handling that?
Okay, so that would be, first of all, if you are itemizing. And so what that basically means is if you, typically your homeowners, if you do, have a lot of tithes, if that is over what the standard deduction is, then it's best for you to itemize. So when you are in that category, you want to make sure that whoever you are donating your money to is actually a 501c3. And so if you're a 501c3, they know that they have federal guidelines they have to follow where they have to issue you a year-end statement. So your churches should be issuing you a year-end statement of all your tithes. And so you, in essence, you just want to make sure you have documentation, even if you are using like a Goodwill or a Salvation Army,
right.
Make sure they give you that little card, so just documentation.
All right, well, one thing about my podcast, I always like to think how my viewers think and like to ask questions. And I know one question that's probably always asked, and let's just dive into the topic of dependence. Y'all know what I'm talking about. You claiming your cousin, your sister that live in another state. Just all type of examples. Let's kind of talk about what is the correct way to claim these folks, so these folks don't get in trouble.
Oh, Laura, so you're about to make me lose my complete cool. You're so funny. So let's start with residential status. The person should be living with you. Right. And so in that guideline, because there's qualified relative, of course, children. And so you have incidents where, perhaps you have your elderly parent or disabled parent or family member, that person's living with you. You have provided over half of the coverage of expenses, food, utilities, so forth and so on for that individual. Then that person is your qualified dependent. But really the way to stay out of trouble is to just know that anyone that you're claiming should be living with you. and also you are providing over half of the expenses, the household expenses related to that person, that then you are on safe territory for claiming that person.
All right. So what's some other red flags you normally kind of see? You be trying to make sure people don't.
Yeah, so I'm gonna always say record keeping. Like I said, record keeping. So with that said, to avoid red flag, a common one is going to be mileage. But you know what, Jarvis? Before I get into mileage, I wanted to start with something very important, which I know we'll dive a little bit into, and I want people to know that your tax professional, your accountant could actually been flagged.
Wow.
And so what does that mean? That could mean that that person may have had a history with the IRS on some of the filing practices.
All right.
I've had a client over the year, several clients over the years who have been audited, and really just with research and so forth and so on, it has really been because that tax preparer or that accountant has had a history of filing fraudulent returns or filing erroneous returns. So, how do you prepare yourself for that? I know we'll get into it a little bit later, but you just want to make sure that you are doing your due diligence on who's preparing your tax returns. But then once we transition out of that, mileage, if you have historically deducted mileage, then or you should know, your tax professional should tell you that you need to keep records of your miles. Now, fortunately, there are all types of apps out there, that use GPS to track. It's so simple. You swipe personal, and then you swipe the other way for business. But to keep track of the mileage that you are taking, whether it be related to your business, whether it be because you may have a family member that has a medical issue, so you're having to incur a lot of miles, or if you are volunteering for a charity and you're using your own vehicle, there are charitable miles. When it comes to mileage, there are a couple of things that I want to highlight too, because I would be remiss if I didn't say so. In years past, you used to be able to deduct moving miles. Like, say, for example, when I relocated from Virginia back to Alabama, at one point in time, you were able to claim that. So you're no longer able to claim moving miles. And that's not new this year. I mean, that was last year too. But the caveat is if you are a U.S. Armed Forces active duty member, then you're able to do, the moving miles. And then the other thing that's not new this year, this was actually in place last year, unreimbursed employee expenses. So that typically is folks who work at a W-2. You're getting a W-2 from your employer, and you may have used your car, if you've done that before, it's Form 2106. You may have used your car in the furtherance of your job, and your employer doesn't pay you for that. So some people have been used to claiming miles in their personal vehicle in a W-2 job. You're no longer able to do that.
Wow. So let's move on to business owners. What are some advice you would give them?
Again, record keeping, documentation, record keeping. When you're running your business, you need to know how much you're making, how much you are spending. And that's not, I say it in my training classes, that's not just looking at your bank statements.
All right.
It's not just that. You need to have an accounting system. You need to have something that is going to allow you to make those CEO boss moves, based on reports, based on your documentation. So when you consider it for tax purposes, if you have a year-round record-keeping system in place to further the success of your business, then tax filing is simple, because your accountant, your bookkeeper, your tax professional is looking at your stuff, and they're able to simply plug it into where it should be. And so that's really going to be one of the general rules of thumbs that I'll say to business owners is, if you are spending money to make money, 9 times out of 10 is something you can deduct. So you want to make sure you're keeping track of that, keep that receipt. Or if you're mobile phone friendly, QuickBooks has an app. Other accounting things have an app where you simply take a picture of it. It imports into your record keeping, your bookkeeping software. So really, again, if you have spent money to make money, you want to try to make sure you keep track of that expense, because that's usually something you're going to be able to write off when it comes to taxes. The other thing that commonly gets my business owners that are pass-through entities, and that's your sole proprietors and your LLCs who have not elected to be treated as a corporation, which is a whole nother topic. But you are going to be subject to self-employment tax.
Oh.
All right. Now, I have had it where, usually when a person works still a W-2 job and then you have the business on the side, they're like, wait a minute, why do I owe? And a lot of times I've had to point out, well, you actually are subject to 15.3% of what your business made self-employment tax, because that's the business owner's Social Security and Medicare. So when you're a W-2 employee, your employer is required to withdraw those things from your check. When you're a business owner, self-employment tax covers your portion and your contribution to that. And so self-employment tax is one that you need to be aware that there are some entities that don't have to, but it's very rare. Most of your service-based and products-based businesses are going to have to pay that self-employment tax. And there are ways, to abate that. Like I said, if you, depending on your income, you can maybe elect to be treated as a corporation. But those are some of the things that I review with business owners here in the office.
Well, one question I'm thinking probably for our business owners just popped in my head. Let's talk about entertainment expenses and picking clients out there. How much can you deduct from that?
So that's a really good topic, because meals and entertainment was one of the newer changes where it was all out, just wiped out.
Wow.
There are certain ways that you could do it, but again, you need to be with a tax professional or accountant who would know how to do that. But, I would limit the amount of splurging or taking somebody to lunch that you do, unless that's just, if that's in the furtherance of how you operate in business. Like I said, there are ways that can still be deductible. But for the most part, just don't think, because I'm doing lunch meetings that I'm going to be able to automatically write that off. It's not going to be the case. You got to be, you got to know how to do that.
All right, another I want to talk about, because I know this new technology we have now, these ways we get our money, Cash App, PayPal, your thoughts, record keeping,
So that really, to answer that question, that really goes to what you and I have talked about before, and that is, if you're a business owner, have a business checking account.
Okay.
Have a bit, start separating your business expenses from your personal. Now, because, this is life. Like, some people they need to use Cash App.
Okay.
Some people PayPal. So, but if you're doing that in your business checking account, then there are ways we can classify those transactions that will benefit you. But I would say, let's get you into an accounting software where we're, using the payment processors in there. You're generating professional invoices and people are able to pay you that way.
Okay, can tell these folks a little bit about the business license. Make sure you get,
Yeah, so, if you're in the city of Birmingham, and first of all, we want to make sure that you have legally established your business in the state of Alabama with the Secretary of State. But, if you've gone through that process, make sure you renew your business license. It's now that online system in place, created by Avenue. It's really simple. It calculates stuff for you. You don't have to manually calculate what you think your due amount is, and you can e-file it online now.
All right, yes, especially I guess they got that with City of Birmingham now this year.
That's right, for City of Birmingham, yes.
So let's switch back to individuals. I want to talk about married couples. What advice do you give them about filing jointly or separately?
I get that question a lot. And I'll lead with saying that the married filing jointly status is typically always going to be your best status. However, I know that there are situations where that would not be the best, and that could be because the husband or the wife or both may have a garnishment issue, whether that be for child support or for student loans, or for some other debt that was not satisfied and they were able to issue a garnishment for your refund. And so in those instances, I've had clients just say, I don't even want to file with my husband. It's like we gonna keep that separate.
Okay.
Or if there's a history of not having filed taxes at all,
Okay.
typically you have, one of the spouses saying, I want to do married filing separately. But with that, when you do file married filing separately, you are in essence sacrificing your ability to claim a number of different credits. You're not able to claim the earned income credit. You're not able, if you're a student, you're not able to claim the 2 education credits. If you have children and you've paid daycare expenses, you're not able to write off those daycare expenses through that credit. So when you have that married filing status, married filing separately status, just know that's what's the toss up. And consider, the innocent spouse protection that you may be able to do. But there are some good reasons, why you would do married filing separately. And that could be for high income households, especially high income households who would have a medical situation. Okay. Where they have one spouse, let's say, makes 200-something thousand, the other spouse makes 60,000. Well, if the spouse that makes 60,000 paid 40,000 in medical expenses, it may be more beneficial, if you're trying to write off medical expenses to do it that way. But it just, it depends.
All right, I gotta think about this. Single folks, is anything out here for us, or we just, move on to the next one. All right, so. I know you're watching this video, and I know you probably say, man, this is some good information.
I hope so.
But I got to keep it real with you. I owe the IRS some money.
Okay.
What do I do?
Well, because you're not the only one. I mean, it happens. Life happens. And what I want to say is, we absolutely want clients, if you haven't filed taxes in a couple of years or you owe, come in here. You know what I mean? We really try to decrease that anxiety. We want you to come in and know that your tax return is going to be prepared correctly and we can help you with your tax issue. But I would just say, it's not going to go away. Okay. You know what I'm saying? The IRS has the Fresh Start initiative where they are working with taxpayers across the U.S. It's based on your income. So if you haven't paid because you're not making money, good. Let's show some documentation that you're not making any money and we can work on getting a tax resolution, or if you haven't filed. Okay. If you haven't filed and you haven't filed in a long time, the IRS can go back, I think it's 7 years on you. Wow. Okay. Now, of that 7, if you go back 3, you're only 8, you can't claim a refund for all 7. So right. If you find out, I was due a refund in 2011, you're not getting that refund. But just know that the IRS can go back, I think it's 7 years, right. If they can prove that you have not filed taxes. So you want to file, what I mean? Baby steps, you want to do 2 years at a time, whatever, but start.
All right, and final question. I feel like this is a knockout the park home run question. I'll throw to you. What should people look for when choosing a tax preparer?
Okay, yes. So we've talked about this before, and this is probably something like one of my pet peeves or whatever when it comes to tax time, because in certain communities,
pop-up signs.
Yeah,
a place that was what they call a Hardee's, and all of a sudden it's a tax business, and then 6 months later it's something else.
Yes.
Yeah.
But so true, so I would start, with, again, you want to make sure that, we talk about the P10, okay? We talk about, you need to have access. It's my personal preference, but again, have access to, your person year round. And you want to make sure, did we talk about ghost preparers before? I know we've talked offline and stuff, but have I ghost preparers? Okay.
Yeah, ghost preparers. You can't find them jokers.
Yeah.
They just disappear. And then one thing about it is you're here all 365.
365.
And I want to go back to earlier, too, that when you go to multiple tax preparers, does that increase the chance of you getting audited as well?
Well, not necessarily. Not necessarily. I mean, because let's be honest. I mean, if you go into some tax places, the person that prepared your taxes this year might not be there next year. So you as a taxpayer can't be penalized for that.
Right.
So no, that doesn't really send any red flags. It may be a little cumbersome to you if you don't keep copies of your tax returns. Because, I would just say that if you're going into a new place, you want to make sure you brought a previous copy, number one, because you need to know some of the data from that. So no, you won't be penalized, but you want to make sure if you're going to do that, because you can't control whether or not somebody's in the same location that next year, to make sure you keep copies of your stuff.
All right, so why should people choose you?
Well, I know there's a lot of options out there, but we here at TMB Tax and Financial Services truly have your best interest in mind. One of our missions is to make sure that your tax filing experience is not just a one-time. That's one of our community issues is when it comes to the financial literacy thing, is tax time should not just be a one-time transaction for you. So we at TMB Tax and Financial Services, we're open year-round because we want to educate you on the process. Now, if you just want to come in, get a refund advance loan and so forth and so on, we got you on that too now. But we definitely want to make sure that your experience is one to where if you have questions about what's going on, just like all these questions I asked, then the person preparing your returns will be able to answer those. We dedicate a lot of our time to continuing education credits. But certainly, we are here to provide a quality and fairly affordable. Look, we are. No, but seriously, we're not going to break your neck. And we sincerely are community based and all about financial empowerment for our clients.
So what's that phone number, address, website? Then we get contact.
All right. So the phone number is 205-407-7367.
Well, thank you, Ms. Bayles.
Thank you
for coming on.
All right.
This afternoon. I hope you all found the information very helpful. If anything, if your IRS somebody, talk to them.
Yeah.
Don't hide from them, because they will find you eventually.
No.
Just don't hide from them, y'all. So thank you all for watching this video. Please check out what's happening Birmingham.com for more videos, and don't forget to subscribe to my YouTube channel. Thank you all again, and have a great day. Bye-bye.
Thanks.
Thank you for watching the What's Happening Birmingham video podcast. Please check out our website, app, or subscribe to our YouTube channel for the latest videos today.